Okay, so today we've got Shiv of U of Digital, and we wanted to talk to Shiv today about programmatic, about AdTech, what's happening in AdTech, and we found Shiv through just part of our ongoing research on AdTech, and I believe you were a speaker at the programmatic conference, and just enjoy what you had to say and read your newsletter and gave you a call, and so you agreed to talk to us, so appreciate your time. um, so yeah, thanks for that.
Yeah.
You
No,
want to
thanks for
introduce
having me.
yourself?
Yeah, thanks for having me. Happy to be here. Thanks, Jeremy. Thanks, Seth. My name is Shiv. Quick background on me: been in the ad tech space my whole career. I was at a little company called advertising.com back in the day. That was like my first job out of college, and they were actually part of AOL. So one of the early ad tech acquisitions was AOL acquiring ad.com in 2004 for like, I don't know, $500 million, I think. So I was at AOL for about 10 years in operations and sales leadership. Then I was at Criteo for a couple of years running their sales team for the Eastern region of the United States. And then 4 years ago, I started U of Digital. U of Digital is an education company for the industry. We focus on providing structured education to enterprise teams, marketers, publishers, agencies, and primarily actually ad tech vendors and companies that are selling tech. So that's what we do. We have a newsletter, as you mentioned. We have a lot of different touch points in which we can educate customers and individuals in the space. So that's kind of who we are. That's what we do.
Sorry, I'm muted. Yeah, so that's great. Thanks for that introduction. Okay, so as part of our ongoing research, we like to talk to people. We like to talk to people like you, sector experts, that you're not necessarily following any of the maybe the public companies, or maybe you are in ad tech, but you probably have a view on where things are, the state of the industry. And if we find, like, talking to people like you, we get a sense for maybe what the sell side analysts, or what maybe Wall Street's not thinking. And a lot of times there's a big disconnect, especially in companies that are going through big change in ad tech. Some are winning, some are losing, and it's just hard to figure out unless you kind of talk to people like you. It's hard to just look at the quarterly numbers and extrapolate anything unless you go a little deeper. So yeah, appreciate you taking the time today, and kind of some of the topics we're interested in exploring. I mean, happy just to let you run with it, but ad tech is one of the fastest changing sectors, and has something like 400 plus billion in digital advertising last year, and set to grow. But the way the different players make money and how that's changing is changing so quickly. So the way, I don't know, somebody made money last year, maybe a little bit different, and maybe it opens the door for somebody else to come in. Barriers are changing all the time. And so one of the more misunderstood areas, I think, is CPM, so the price per thousand, and the opportunity in pricing of ads, and how that's evolved over time, kind of where we've come, where we are today, and where we're going, and what are some of the drivers of digital ad pricing, and why is it that, like we were saying, why maybe like a Facebook can get $20 a month off of their of her CPM from their most engaged North American subs, versus maybe another company that has a lot less subs but can get maybe $2 a month. Why is that, and what's changing, and what are some of the opportunities out there to raise prices, or gain market share, or lose market share?
Yeah, it's a really good question. Obviously there's a lot of factors that go into pricing, across each one of these players. I think it's a few things. So first of all, price is obviously a function of supply and demand, right? Like, that's the first thing that you think about, is supply and demand. And one thing that's critical if you're a marketer in today's day and age is being able to get scale, right? So the obvious kind of play with some of the bigger platforms like a Facebook is they bring mass scale. They're able to capture more demand. More demand equals higher prices. Regardless of them having more supply, they have, I'd say proportionately, they have more demand than the other players. So that's an obvious, clear-cut kind of explanation there. But it's also a lot of other things, right? So, it's kind of how marketers plan, how they think up and down the funnel. Performance marketing versus brand marketing. Measurement is obviously a key component of being able to capture high CPMs as well. Driving on platform conversion, right? So that ties to measurement. So just kind of unpacking some of those points. I think Facebook is an interesting player in the space because they do such a good job of kind of capturing the entire user journey from the top of the funnel all the way to the bottom of the funnel. And that's compelling for marketers, right? Because it's not just a place to put performance dollars or brand dollars. They can kind of do both. And then the beauty of that is they can connect those things within the same platform, right? So they can tie together, hey, I ran, this brand campaign. I saw my user kind of progress from brand into the mid funnel, from mid funnel into performance. And, oh, this is really cool because it all happened within Facebook's ecosystem, right? So this user first interacted with an Instagram ad, and then maybe, we saw them on Facebook, and then later on they searched for something, and then we were able to kind of capture that intent signal and retarget them, right? So Facebook is very compelling from that perspective, whereas some of the other players, let's say Twitter or a Snap, their offerings are not as robust when you think about top of the funnel all the way to the bottom of the funnel, which again kind of hurts their ability to tell a holistic kind of user journey story and hurts their ability to capture that scale, right? Capture that demand. So that's one thing to think about. And then the last piece is measurement, right? And I think we can kind of go into depth on measurement. But measurement is fascinating because I think, marketers have become so accustomed in the digital realm to be able to tie their media to outcomes, right? And I think some platforms have done a really good job of helping marketers tell that story within their own ecosystem using their own tools, and others not so much, right? And so that has to do with a few things. That has to do with the measurement tools themselves. So like, hey, how robust is your insights platform? How easy is it for me to connect ad impressions to conversions? How scalable is that data? How accurate is that data, right? And so Facebook is very well positioned, and they've done a really good job of doing those things effectively. Facebook bought a company of several years ago, actually more than that now, called Atlas, right? So that was a big acquisition for them that, initially people were wondering like, hey, where's Facebook going with this? I think they could have done more on like the programmatic side of the house with that offering. But what they did do is they turned that into a pretty robust measurement capability, right? Like, so they have something called the Facebook Pixel, which now is basically Atlas's technology, which they use to kind of tell a full kind of consumer journey across a bunch of different media touch points, their own and external ones, which is very powerful, right? So it's the measurement. And then also tying to that, the last thing I'll say there is it's about on-platform conversions, right? And how much time people are spending on those platforms. So Facebook obviously has storefronts now, right? Where people can actually click on a product, click on an ad, buy that product maybe within the platform. And that is really, really compelling as well, right? Because as we see the explosion of D2C, right? And D2C advertisers want optionality when it comes to being able to drive conversion. And as we see kind of data privacy cripple traditional measurement, especially when you're talking about cross-domain or cross-app measurement, then it becomes more compelling if you can actually have your storefront within the ecosystem, right? So you don't have to worry about the disconnect if a user clicks on an ad and then goes to a completely different domain or a different app. And Facebook, is well positioned. I think they're early, but they're well positioned to kind of grow that part of their business. And you see a lot of copycats, right? Like TikTok is doing that with integrations. Snap is doing that, obviously. So those are some of my initial thoughts on the pricing question.
So the idea of converting within the site, and so is that one way to close the gap? Or is that one way to add a lot of value for a CPM? I mean, is that one of the reasons why you may see? Is that one of the opportunities, I guess, to increase the CPM for a company? Is that why you might see such a wide range of value per hour or pricing per hour across the different platforms? is
I think
because
it's
some
one.
are converting on, some are converting within, and some, and I guess, and not to cut you off, but does that then make the case for why you would want to invest as a business to increase the amount of time that somebody's spending within your platform, so you have a higher chance of converting them within the platform? So there's less, there's more measurement, and there's basically no question that the ad was consumed, or a higher probability that the ad will be consumed within the platform because you're spending more time on it.
Yeah, I think that's a fair assumption. I will kind of caveat that, like, I think this is one of many factors, right, that influences CPMs, as we kind of touched on a few of the other ones. But yeah, I think this is an important factor. I think if you're a brand, I do think that there's a little bit of a catch-22 here, in the sense that, yes, you want the measurability. Yes, you want to be able to, like, really confidently tie media to performance. The catch-22 is, there are certain ways to still be able to capture at least some measurement, even if it's off platform. And if you keep things in your own ecosystem, right, as opposed to maybe pushing it to some of these social platforms, there is some benefit from a data perspective, right? Like, there is some benefit from a user experience perspective. There is some benefit from a brand building perspective, right? When you actually have users coming to your ecosystem, your site, your experience. And so I do think that that's something brands have to kind of, like, consider, right? If the CMO is running the ship at the brand, well, then the CMO might dictate, hey, listen, I need to know when the conversion's happening. I'm pushing everything to the storefront on Facebook, right? But if it's somebody else, right, if it's the chief data officer, or even the CEO of that brand, right, they may counter that and say, hey, listen, we don't want Facebook owning our data, right? That's risky to us. And we've seen Facebook, kind of do things with data that are questionable in the past. So, like, we don't necessarily trust that. We're okay with the measurement kind of being a little flimsy, right? And maybe doing some other ways to work our way to the math. But I do think, the larger point that you're making is fair, right? The more time you get consumers spending in an ecosystem in the same domains, right, the more kind of full-fledged multi-touch attribution a marketer can get from that platform. And then if you also have the conversion living there, then it's a no-brainer, right? Like, you know what's happening, and you can kind of increase your pricing accordingly.
So what's an example of some of the data that hasn't been used before, or that can be used to maybe enhance the targetability, that, where is that going, and what are some of the kind of evolving technologies or opportunities there to measure and capture the interest of kind of one person that maybe weren't there before, and how's that evolving?
Well, so data obviously has been kind of like the oil, right, for programmatic advertising. Data is what makes this whole thing work, and makes it valuable, makes it worth it. And we've been data targeting against users for many, many years now. And so I think it's interesting to think about the evolution of that, right? So, like, back in the day, you had kind of just anonymized pools of users kind of moving back and forth between different buckets of audiences. And that was all that we had, right? So over time, we got smarter and smarter. We started using first-party data way more effectively, right? So marketers started mining their own data, started using tools like DMPs and CDPs to do that more effectively, right? So there's been this kind of huge evolution. And then obviously the Facebooks came in, the Googles came in with just a massive treasure trove of data, where they were able to tell a marketer more about their own audiences than they knew, right? And so I think what's interesting now is we're kind of in this moment of data privacy, right, where some of that data is actually going away, right? Or some of the mechanisms for tracking that data cross-platform, cross-app, cross-domain, those mechanisms are going away, right? So how does that impact things, I think, moving forward? I think that's what we need to be thinking about. And I think that some of the big players like a Google, like a Facebook, are having to kind of toe the line. They still have the most data in the world, but they still have to kind of like toe this line of, hey, we're going to be privacy centric. We're not going to necessarily get very granular anymore about user data. And I think that will degrade targetability a bit in their platforms. But I do think what's more interesting there is I think targetability in general against data is going to be degraded across the board, right? And this is a zero-sum game, right? The whole thing that we live in here in the advertising space, it's a zero-sum game. So targetability goes down across the board. Yes, targetability goes down in Google and Facebook and Amazon, but it goes down less than the rest of the ecosystem. It goes down less than what we're seeing across the open web. And so, I think the walled gardens stand to benefit from all of these data privacy measures, which obviously is ironic, right? Because, a lot of the reasons they started in the first place was because of these platforms. So I think that's the interesting thing to think about is like targetability is going to get degraded across the board. Who will be hurt kind of disproportionately? I do think it's going to be companies that don't have a strong consumer facing relationship, frankly.
Maybe if I could ask one, I think there's a lot of platforms and walled gardens out there. I mean, what do you look at as characteristic for a strong platform? And I think you mentioned, why are they going to get stronger? And what are these companies doing to sort of reinvest in themselves to future-proof their business models?
Yeah, great question. So I think it's a few things. One is being able to make sure that they have the user across many different types of touch points in their journey, like a shopping journey. I think those are the platforms that can really succeed, right? Versus platforms that are very niche, like, hey, we are very good at building brand. We are very good at driving performance. That stuff kind of is starting to break apart, right? Because of data privacy. And so if you can capture the user across that journey, I think that's valuable. That's number one. Number two is I think the platforms that are really investing right now heavily in the measurability of what they do are going to benefit, right? So like some companies are taking the approach of, hey, like, we don't want to grade our own homework. Marketers have never liked that. We're going to continue to integrate with third parties, and all of that's fine and great. Marketers love hearing that stuff. But when it comes down to like the actual practical application, the practical measurability of this stuff, again, the third party measurement is breaking apart right now, right? And so the platforms that are investing heavily and going to market and saying, hey, listen, we've got great brand lift tools. We've got great incrementality measurement tools. We've got MMM tools. We tell a multi-touch attribution story like a Facebook. I think those companies are leading the pack, right? I think they have a good chance because they're making their own offering very sticky, and they're making it sticky early on, right? In this whole kind of evolution of data privacy. So I'd say those are a couple things that pop into mind.
Yeah, great. And, I guess along with, I think if you pop open any earnings call or transcript, and AdTech measurability is probably the most mentioned word. We know it's flimsy, and I think as investors, it's kind of challenging to call balls and strikes and what is a good enough level, but why is it flimsy now, and what will make it less flimsy going forward? Is there anything these guys can do, or is it just simply convincing a CMO who's allocating budget that their measurement is not flimsy?
Yeah, honestly, I think it kind of goes back to what I was saying earlier with targetability. It's the same idea with measurability, which is like, we all collectively agree and know that measurability is going to get harder, less accurate, less scalable in the future, right? So because measurability is predicated on cookies, measurability is predicated on device IDs, and we know those things are starting to go away. And so I think that the general consensus is, hey, we know this stuff's going to get worse, right? But how much can we mitigate that, right? And which partners can help us mitigate that effectively, right? And I think that's where you get into these closed ecosystems that can have the full journey and have the full view of the consumer and be able to tell a good story and have a decent amount of confidence in it, even though it is flimsy. Everyone agrees it's flimsy, still have a decent level of confidence in its accuracy and scalability. Now, I do think that, like, I'm just going to play devil's advocate to what I'm saying. Like, I think there's a world in which everything gets so flimsy, and we're starting to see this a little bit right now, that marketers are like, you know what? I don't believe any of the stuff that's out there. Really, I'm going to go back to like the old ways of measuring, right? So I'm going to start running A/B tests. I'm going to start, doing MMM, right? Which is, old school TV measurement. I'm going to start running brand lift studies, things like that. And, I do foresee a world where like everyone's just kind of assuming that, hey, some things are happening in the background. I can tell some of my conversions. I can't tell other conversions. I kind of don't trust any of this extrapolation. And so at the end of the day, I'm going to look at the big picture. I'm going to be more strategic. And I do think that that is an interesting outcome. I think that the Facebooks of the world, maybe the Googles of the world, should be able to counteract that and maybe stand to benefit if that's where the rest of the world goes. But we'll see. We'll see. It's kind of like this moment of a lot of uncertainty, frankly.
Isn't that direct response marketing and kind of where everything's going? Because it seems to me that the opportunity really is, to your point, is to basically create a scenario where there's no question that it converted within this app. Like if you're watching Roku or you're listening to Spotify, if they can say, hey, we know for a fact and can prove that this person bought this thing while listening to this podcast, that's kind of as good as it gets, right? And it is that sort of where everybody should be heading or trying to head.
Yeah, I think so. That's the idea of like, hey, listen, we had the user captive in our environment, and then they converted within our environment. We were able to tie those things together with 100% confidence. That's foolproof, right? Like that's going to be the Holy Grail. I think the problem with that big picture is like, we're in a fragmented world, and I think we're going to continue to be in a fragmented world. So like Roku will be able to give you one aspect of that as a marketer, but that's not going to be your whole world unless you're, connected TV app. Of course, if you're a connected TV app, then like, hey, Roku's a great solution. Maybe you have a few different partners, Samsung, Roku, Amazon, and you're good, right? As long as all of them can tell you that story. But the flip side of that is marketers, let's say you're a D2C marketer, you're going to have a lot of different conversion points and storefronts and your own sites and sites on Facebook and Roku and Spotify, right? So I think we're moving towards a world where, yes, if you're a walled garden, you can do that. You can tell that story. You really stand to benefit from DR dollars. But I also think that, like, if you think about digital as a whole, digital has under-indexed on brand dollars for a long time, right? It's been kind of a blessing and a curse in a way that digital is so measurable. But the curse part of that is we have under-indexed on brand, right? Like linear TV gets way more brand budget than connected TV and digital. And that's because you can't measure anything on linear TV, right? All you get is Nielsen. And so you're just like, all right, well, I know this is mass reach. I know the CPMs are low enough. I know it works. I'm going to buy it, right? Whereas digital doesn't really get that benefit. So I think that as the measurability becomes blunt and less accurate, less scalable, I do think that you're going to see more brand dollars kind of shift into digital faster. But I think you're correct, Jeremy, that the platforms that can tell that very specific story will benefit from a DR perspective.
And the opportunity, though, from a pricing perspective, should be performance related to be able to prove that. So if I'm one of these platforms, I want to increase how much I want to make more money. I want to monetize an hour of engagement, double, triple, quadruple, over the next 5 years. And I don't know how you do that with brand. I don't know how that would be, and I totally agree. And that's one of the interesting issues is if you look at Amazon's ad business, I mean, how much of that do you think is brand advertisement? Probably zero. I mean, yeah. I don't know if Coca-Cola is advertising on Amazon.
Yeah,
it's all direct response, and so that's where the money is because that's where the margin is. And if I can show an incremental return. And I don't have to do anything for it except carry inventory. Well, there's an enormous margin opportunity for the person that controls the eyeballs. And I feel like that's kind of, the bigger story that a lot of people don't tell, or at least it doesn't come across very well is it seems to me that's where the opportunity is. And how does that work out for a brand advertiser? Is brand advertising effectively dead because it can't be measured?
Yeah, it's a good question. I mean, listen, I think this is all right. It's all up for discussion, and I don't think there's right answers. I think it's all speculation. I think you tell a very fair kind of you're telling a fair story. I think the alternative, like the counter to that, is hey, measurement is kind of breaking down everywhere, and so yeah, marketers I think the Amazons and the Facebooks of the world stand to benefit a lot from a DR perspective, but also brand. I think I think there's so much value in a marketer driving the top of the funnel, right? Like that I think marketers have kind of missed out on in the past, especially when it comes to digital. And so I think that in order to be an Amazon or Facebook, you're going to have to be able to tell a very confident, accurate, scalable measurement story. But everyone else is going to be falling back on like, hey, this is a great brand offering. And I think there's going to be a place for that, right? And I think that's going to be scalable as well. And you could make the argument that because it is not measurable, it actually could be higher margin, right? Whereas like in the past, DR sometimes gets crunched because it is measurable, right? So it's two sides of a coin, right? I don't think there's a right answer. I think it depends kind of on the platform, the channel, the marketer, so many different things. I don't think there's going to be like, hey, everything is going in this direction or everything is going in that direction,
Well, that's super insightful. So we're getting kind of towards the end. I mean, is there, I don't know. I just wanted to maybe shift gears and ask you about, different marketing, different mediums, different media mediums, and kind of where the opportunity is. What's maybe the most, where's the biggest blue ocean, and what's the most crowded, and what medium would you bet on over the next 3 or 4 years?
Yeah, great question. I mean, listen, everyone loves CTV right now. Everyone's talking up CTV, obviously. That's the hot shiny penny. And it makes sense. There's so much money still that goes into traditional linear TV. And, 5, 7, 10 years from now, that number is going to be zero and all that money is going to be in digital, right? Everyone's going to be on connected TV. So I think the excitement there is warranted. I do think that I think there's so much investment there and so many players there. It's already so crowded that, to your point, it's not a blue ocean, right? It's pretty red ocean already. That doesn't mean new players can't be successful, right? It's still kind of early innings and there's a lot of growth to come, but it is crowded and it's hard, right? There's a lot of vying right now for measurement in the space, right? Like Video Amp and iSpot. And like, you just hear these players every day getting tons and tons of money to kind of try to be the Nielsen for connected TV. In my opinion, I don't think there's going to be one winner there when it comes to like connected TV measurement. So that's going to be interesting to see how that evolves. But bottom line, I think connected TV obviously is interesting, but pretty crowded. Streaming audio, I would say some kind of similar things there to a lesser extent, but similar idea. I think there's plenty of players, lots of interest, a bunch of investment, a lot of growth. Obviously, the money is going to come as things migrate over from terrestrial radio. So I think that's an interesting one too. Where I think there's a ton of opportunity, honestly, is digital out of home. Like I'm pretty bullish on digital out of home as kind of an open area. I think people.
Wait, tell us about that. What is that? Explain that. What is
sure,
digital
yeah,
out of home?
digital out of home, the idea that, any advertising you see in your physical environment outside your home, that is digitized, right? So, the billboards you see in Times Square, the screens that you see on the subway, all that fun stuff. And I do think that's interesting, right? Because it is, first of all, it's very, very differentiated from the other mediums that I spoke to in how it captures users' attention. It's a one-to-many versus a one-to-one or a one-to-few, which I think is powerful from a brand and upper funnel perspective as well. And I just think a lot of companies got scared off during the pandemic because digital out of home took a huge hit, right? Like people weren't going outside, people weren't commuting, all that stuff, right? And I think as the world kind of starts to get back to normal, people are really engaged and excited, right, to be traveling and to be moving about and to be, visiting friends and family, to travel for leisure. I think business travel is coming back. And so I think all of those things also aligned with the idea that there's just so much inventory that still needs to migrate over. And a lot of the players in the digital out of home space are like legacy players. So you have like Intersection and, Lamar and Outfront. And some of these players are like, I think they need to be disrupted. I think they will be disrupted. I think some of them are doing a good job of kind of disrupting their own model. So I just think it's like earlier in the disruption curve with digital out of home than it is with some of the other mediums that I spoke to.
Yeah, well, I'm excited to get out there and see Times Square again. So looking forward to that. So, okay. Well, thanks. It's been super interesting and helpful insight. And, again, this is just, it's so nice to be able to talk to industry people because a lot of this is just missed when you when you're just a public company investor like us, this is it's really helpful. And so, hey, for people that want to read more about you and maybe take a look at your newsletter, how can they find you and how can they find you?
Well, do all the social media stuff. So please connect with me on LinkedIn, Shiv Gupta. Find me on Twitter. I tweet a lot about AdTech. There's a little burgeoning AdTech community on Twitter that's fun. So give me a follow there. And then in terms of U of Digital, we put out a newsletter every week on the industry to help people keep up with all the crazy headlines and everything that's going on in the space. You can visit our website, www.uof.digital. It's a .digital, not a .com. And you just go to the newsletter section. There's a free version that you can sign up for to give it a spin. And there's an upgraded version as well if you want to eventually sign up and pay. So, but yeah, we would love to have everybody kind of join in and join the community.
And where are you going to be speaking next?
I'm going to be speaking at Programmatic IO, which is a conference held by AdExchanger, one of the largest publications in the AdTech space. So that's in Vegas on May 22nd or 3rd, something like that. So we're going to be running a session, an educational session on the connected TV environment, just kind of going through the fundamentals, how it works, jargon, key players, the future, et cetera. So that's going to be really fun. Really excited about that.
Okay, cool.
Yeah.
All right. Well, thanks again, Shiv, for your time. And looking forward to following your newsletter and listening to you at Programmatic IO.
Cool. Yeah. Thanks, Jeremy. Thanks, Seth. This was great. Really appreciate it.
Okay. Take care.
Okay. You too.